Hello, welcome to the weekly technical analysis review for Tuesday, October the 2nd. I'm Rafa Bayajian, currency analyst at xm.com. The pairs we're going to look at for this week are the dollar yen, the euro dollar, and Wti Oil Futures, the November contract. Starting first with dollar yen, we can see the pair is looking very bullish in the short term. RSI is hovering around the 70 overbought level. That does possibly indicate a short-term downside correction, and we can see that through price action today, which is moving lower. We can see though yesterday prices peaked at a 11-month high of 114.06. That was just below the 261.8% Fibonacci extension of the down leg from 111.82 to 110.37. A break above that key level would then set the next target for resistance as the 423.6% Fibonacci extension at around the 116.50 level. However, if the downside correction gathers pace, we could then see support coming at around the 113.30 level, which had acted as support in recent days. A break below that level, we could see the 20-day moving average coming into focus. Currently, that stands at around 112.30. Below that, we've got the 50-day moving average, which is around the 78.6% Fibonacci at 111.50. And further down, we've got the 111 handle, which is just about at the 50% Fibonacci level. If prices were to break below that key area, that would turn the focus back to the downside, and then we would see the short-term bias turning bearish. Let's now turn to a euro dollar. We can see prices have touched a 6-week low of 1.1505. That's the 61.8% Fibonacci retracement of the up leg from 1.13 to 1.1814. So that is acting as immediate support level. A break below, that's a key area, which is at around 1.1497, so more or less around the 1.15 level. We could then see the 1.1410 level coming into range. That's the 78.6% Fibonacci, and then a drop below that level we could see euro dollar testing that low from back in August of 1.13, and then a breach of that low. We could then see the next support level, major support level, being the 161.8% Fibonacci extension. That's at 1.0982. Looking at the technical indicators, we could see RSI is heading downwards, approaching oversold levels. If we look at the stochastic, it's already entered into oversold levels. So a bit of a mixed message there. So looking at stochastics, we could see the percentage K line, the blue line, is flatlining and could soon be reversing higher. On the other hand, the RSI suggests that further losses are on the cards in the near term. However, if we do see an upside reversal and a bounce of that 61.8% Fibonacci level at 1.15, we're likely to see strong resistance. First at the 50% Fibonacci at 1.1557, then at the 38.2% Fibonacci at 1.1618. So the 38.2% Fibonacci is also where the 50-day moving average is currently flatlining. So a key resistance area there, which if prices were to break above that level, we could see the upside momentum gathering some pace, and then we could see euro dollar once again being able to target that September peak of 1.1814, and then that would help shift the short-term bias to more bullish one. In the more medium term, though, we could see that euro dollar still remains within recent range, pointing to continuation of that medium-term neutral outlook. Finally, having a look at Wti Oil Futures, we can see prices earlier today made a fresh 4-year high of 75.9 88. Looking at the RSI, it has crossed into overbought levels, suggesting that we could see a downside correction. If that was to happen, support would likely come from around 73.50. Below that, we've got the swing high of 71.37. And then further down, there's the 20-day moving average, which is just above the 78.6% Fibonacci retracement of the downline from 71.37 to 66.84. That's around the 70.40 level. A drop below 70.40, we could then see the 50% Fibonacci at 69.11 being the next focus, and that's also where the 50-day moving average is currently standing. So a key support region at 69.11, which if prices were to breach below that, we could then see a more bearish picture for WTI. But for the time being, it is looking very bullish. If we were to see a continuation of that uptrend, the next focus on the upside would be the 261.8% Fibonacci extension at 78.70. Looking at the more medium-term picture, it is looking neutral to bullish. We would need to see further gains in order to see a stronger bullish picture in the medium term, given that prices have been consolidating since late June. That's it from me. Thank you very much for watching and have a great day.